Welcome to today's Super Reform webinar. My name is Sebastian Brennan and I'm one of the implementation consultants here at class. So today we're going to take you through some of the enhancements that we've released to help you manage the Super Reform legislations. So what I want to do to start with is give you an overview of the changes that we've made here at class and show you how these changes will assist you in managing super reforms. So the first thing that we've done is we've added some new filters in the members console to make it easier for you to manage the workflow by being able to quickly identify your members based on a set criteria. The second thing that we've done is we've created a new bulk commutation screen so that where members have multiple pension accounts, you are able to commute those pensions in one go and then generate one set of minutes and resolutions to go with it. We've created a couple of new reports to help you analyse the Cgt Relief, depending on whether the fund is using the segregated or proportionate method. And we've also included transfer balance cap communication request letters and minutes. Of course, we've added the new Cgt Relief functionality so that you can apply for Cgt Relief for each of the fund's investments where it makes sense to do so. And we've made a couple of other changes, updating the contribution caps and bring forward rules for the next financial year, as well as capturing information for transfer balance cap reporting. So what I'm going to do now is jump into my fund and show you how these changes work in class. So the first thing that I want to show you is the members console. So the members console is at the business level, so it's where you can see all the members for your business in the one place. Now what we've done is we've added some new filters here. Now these filters are set, you cannot create your own, so you need to use the ones that are here. And what we've got are filters around your contribution caps, also around the age of the member, pension, fund type. So there's a range of filters that you can use there. The one I want to show you today is the filter for pension balances above the $1.6 million cap. And as you can see, if we use that filter, it brings up all our members. Now we can use multiple filters at the same time, and we can remove those quite easily as well. Now in this screen, what we can see for our members across all our business, we've got the total balance, and then we've got the total balance in pension phase for each member. Additionally, we've got here another column indicating how many member accounts each member has. So what I'm going to do now is show you the second feature that we've got. We've actually got a shortcut to that here, so I'm going to look at Tony Marshall. And the second feature is the bulk pension commutation screen. So if I jump into that, what we've got here is for Tony Marshall, we're going to choose a commutation date. Now I'm going to choose the 30th of June 2017. You'll notice here that I have previously run a period update on the day before, so the 29th of June. Now I'm going to choose my commutation type, and I'm going to choose payment to accumulation. I'm going to leave my description as is, and what you can see here on this screen are the 4 pension accounts that Tony has. Now for each pension account, we have a column indicating the start date of that pension account, the total balance in that pension account, along with the tax-free percentage, which is quite important, and of course whether the minimum pensions have been met for the year. So at this point, we've got two choices. We can go in and enter the amount that we want to commute for each pension account individually. Or the other choice is that we can actually get class to do the allocation for us based on a set criteria. So in this case, what I'm going to do is enter the amount that I want to commute. So I'm going to enter here $410,484, and I'm going to choose my allocation order. So I wish to commute from lowest to highest tax-free percentage, and I'm going to click calculate. And watch what happens to the amounts here. The $410,484 has been split up based on my allocation order, which I've specified here. The other thing you can see here is the remaining balance. You can see in this case the remaining balance is 1.6 million. So we can go ahead and submit that, and we will get a warning message. The warning message is in relation to pension review, asking us to ensure that we've met our minimum pension, and we have, so we can ignore this message. So what you'll find next down here is that we've got commutation reports. Now these reports are for pension commutations in general. They are not specific to pension commutation in order to comply with the transfer balance cap. I will show you where to find that in a moment. It's located in the report section, and it does look quite similar. The main difference being that the reason is specified for the one in relation to the transfer balance cap. So this one here, if I run this report, what it will show us is a letter from the member requesting us to commute pensions, and then minutes and confirmations from the trustees. Now, as I said before, if I jump into a fund, which I will do now, and navigate to the reports section and run a report, I will be able to show you then under the super reform categories, here is our transfer balance cap commutation letter. Now this is the irrevocable instructions requesting commutation of our pension accounts. Once again, we can choose our allocation order, and we can run that once we've done the period update. So this one looks very similar to the previous one as mentioned before. The main difference is that we do make mention to the reason being to support or to comply with the transfer balance cap. So again, we got the letter from the member, the minutes, and the confirmation from the trustee. Now what I'm going to do is jump into the other reports that we've got in our report section and show you the difference between the capital gains relief analysis for segregated fund and the one for a proportionate fund, the one using a proportionate method. So main difference between these two, if I just run that here, is in relation to the date that class is picking up the price for a particular investment. So here I've got my investments, and I've got multiple rows for different parcels. I can see I've got my purchase date, my quantity, and my cost base. Now this will be the same in both reports. The main difference here, because this fund is using the proportionate or unsegregated method, the price of the asset for revaluation is only on the 30th of June 2017. You can see that the price for that particular asset is indicated here, and then we've got a market value, which is our price multiplied by our quantity for each investment. Now the last two columns, capital loss and capital gain. This is indicating whether there is a notional capital loss or capital gain on each of these parcels, and this is useful in order to make decisions later on when we get to the Cgt Relief function, whether you want to apply for that relief for those individual parcels. So let me go and show you now the report for a segregated fund. As I said, similar layout. The main difference in this report is that the price will be a price for the asset between the dates of 9th of November 2016 and 30 June 2017. So as I run this now, we'll be able to see the similar columns, similar layout. And as I come up here, so yeah, as you can see, we've got the purchase date, quantity, cost base. These are the same. The main difference being now that our price is a price between 9th of November 2016 to 30 June 2017. And the report is looking for the maximum price during that period. And once again, it's multiplying that price by the quantity to give us a notional capital loss or notional capital gain. Now, let me jump into the next feature, which is how we actually apply Cgt Relief for those assets. So we go to the members console and go to the Cgt Relief application screen. Now if I enter 30 June 2017, we'll see that class will bring up a list of all the investments. Now not only does it show me the investments, but it is also showing me multiple parcels, if applicable, for certain investments. So if you hold several parcels of a particular investment, then you will see multiple checkboxes, and you have the ability to tick those checkboxes, or where there is only one parcel, you can tick the parcel or the checkbox at the top here. So what we can see in this screen is our total capital gain. So if we just minimize these, we'll see that for each investment it is providing us with our total capital gain. As soon as we select a particular asset, you'll see that the total gain changes at the bottom here. Now with this screen, you are able to run this multiple times. So we can go and run it, say, for AMP only, and submit this event. There is no edit button on this screen. So if you do make a mistake, the only option you have is to delete. If we're happy with that, we close it. We might go in and then make apply for the Cgt Relief for other assets. So we can see that if I put, again, 30 June 2017, then the asset for AMP is no longer here because we've already applied for the relief. So what's happening in the back end? Class is running a deemed sale and then reacquisition on the date that you are running up here, and that will also then reset the discount period for capital gains purposes. That adjustment can be then seen in the maintain parcel matches screen, and you'll be able to review that going forward if you need to. So we can apply for our CGT relief for our assets here. We can also apply it for property. Now in this property, or in order to apply for CGT relief for a property, what you need to do is enter the market value the day before you are running this. So when you're running the period update on the 29th, I've entered my market value for my property, which was 550,000, and therefore I'm able to reset the cost base. The other thing that's worth noting here is where you have other investments that you are running through a custom holding account, you are able to manually enter the amount of capital gain that you wish to apply for that asset. So we might say in this case that we've got documentation that says that the capital gain would be $50,000, and we'd like to apply for that particular asset. So I'm just going to go ahead and select my CGT relief for the remaining assets. As another note, if an asset was purchased after the 9th of November, it will not appear on the screen because you're not eligible to apply the CGT relief for that asset. So I can go here and process this here, pressing submit, and I can then go back to our reports screen and generate the CGT relief application minute. So I'll just wait for this to load so I can show you the next screen. So every time you run this, it will update the minutes. You do not need to run a period update for the minutes here to be updated, but you may need to run a period update once you have finalized everything for the financial year to close off the financial year. So I'm just going to run this report now to show you what it looks like. So we can see here for each of our assets, it is split by parcel. So where there is multiple parcels held of a particular investment, we see that as multiple rows. It also details the relief amounts that's been applied for that particular parcel and the date that we applied the relief for. So once again, if you do run the CGT relief multiple times, this report will update after you've run that CGT relief application for a particular investment. So I now want to show you a couple of the other changes that we have made in class. First one is just in the members' contribution. So for those of you that are familiar with class, you would note that generally speaking, the employer contribution is a one-line item. But what some of you might have noticed if you've processed contributions for the current financial year is that we now have this split into employer mandatory and employer voluntary. And the reason for that is to assist with the first homeowner changes in relation to self-managed super funds and the requirement to split out the difference between mandatory and voluntary employer contributions. The other thing I just want to show you is that if we try and process an employer contribution for $35,000 for the 2017-18 financial year for a particular member, class has updated the contribution caps. You can see here it is asking us if we want to exceed by $10,000, so it knows that the employer contributions are now $25,000 per member. The other thing that is worth noting in relation to transfer balance cap reporting, and that's around the CGT, that's around the pension commutation. Now you will still note that we have kept the pension commutation for a single pension, so you can still run a single pension commutation if you want, or a bulk pension commutation. Now when I ran the bulk pension commutation earlier, I did so as of 30 June. Now you'll see that if I change this date to be in the current financial year, so the 2017-18 financial year, I get an additional field which is the reason for commutation. Now we have started to capture this information which will be used a bit later on for transfer balance cap reporting. The other thing that we've done is under the members area, contribution caps. Again, for the 2017-18 financial year, we've added an extra field to capture external balances outside of class. So if you have a self-managed super fund held elsewhere, you'll be able to edit this field and enter the amount that might be held in the other fund. So that's something that again we've done in order to assist with some of the legislation changes. You can submit that. So those are the changes I wanted to show you. What I want to show you next is how you can find out a bit more about these changes. So the best place to go is in our user guide. We have added an extra tab in relation to the super reform changes. And some of you may have noticed this tab in the last few weeks if you've been jumping onto our user guide. So we have got quite a number of new pages around here which are quite detailed, so I thoroughly recommend that you have a look at these pages. What you will notice on these pages is that class has made some changes, and we've outlined for each of these issues or items the types of changes that we have made in class in our system. But we've also got some further software planning in relation to these changes, and you'll notice that we've listed these. So we have quite a number of changes that are still planned in order to assist us with the ongoing super reforms, and these will be released over the near future. So have a look at here, this area in the user guide, if you want to know a bit more about what class is going to do. The other thing that's worth mentioning is on our homepage we do have a section in relation to the super reform. Now we did email a couple of these, a link to a couple of these pages over the last few weeks. Sorry, I'm just aware that the screen is lagging a bit, so I do apologise for that. So under Insights and Ideas, we have got here the super reform page where we've outlined some of the changes in more detail and linked it to how it impacts you and what are some of the strategies that you may be able to use around those changes. So worth having a look there. The other thing that we've got coming up is our Class Connect conference, which is actually coming up in a few weeks. So we will have an opportunity there to listen to some of the insightful speakers on the super reforms. So we have Cassie McFarlane from the ATO, Meg Heffron from Heffron, and also Craig Day from Colonial First State, along with our class team, where you'll be able to come along and talk to us, find out some more tips and techniques on how to manage the super reform.